Hello and welcome. You're watching Markets Tomorrow right here on ET Now. I am Ajay Sharma.
Hi everyone, I'm Ambareesh. Well, let's run you through our guest lineup for the rest of the day. For the rest of the show, pardon me, Ambareesh Baliga, Managing Partner, Global Wealth Management at Edelweiss Financial Services, joins in to talk about the fundamentals. There's Ashwini Gujral, Fund Manager at ashwinigujral.com, who will also be joining in on the show.
Well, let's focus on the markets then. Another very harsh day for Indian equities. In fact, Indian equities were the worst performing in entire Asian trade today, almost staring at a 4% cut for the Sensex and the Nifty. In fact, adjusted about 3.5%. And you are falling very sharply, especially, in the last hour and a half of trade, the selling just got accelerated. So it was a big walloping coming for the large cap companies on the Nifty, ITC, RIL, HDFC Limited. These 4 or 5 stocks were actually dragging the Nifty lower by almost 100 points alone, apart from the other stocks that you're following. So that was the velocity of the fall today, and that has to be on the back of some serious fund selling which we were gathering. Surely it had a role to play, which was coming from after all the steps being taken as far as rupee stability is concerned. They were just not bearing any fruit, and the strength got reversed. Also, the Syrian issues seem to be simmering yet again, and we did see some comments and some action happening in the Mediterranean side. That also led to acceleration as far as Indian selling is concerned in Indian equities. And EMs in general are very prone, or more prone than developed market economies and equities, if this particular issue actually escalates. Also, if you look at some of the areas which dragged the markets overall lower, banks stood out today. And one of the biggest losers in trade, over 5%, is the kind of cut the entire BankX saw today. Of course, led by some of the big moves in ICICI Bank, HDFC, Axis, all of them. Axis, in fact, 10% in trade. That's a big cut coming in, clearly indicating some fresh shorting is happening from the institutional side as far as these banks are concerned. Also, the Bank Nifty was taking a very big knock in trade today. FNOQs are indicating that as we were nearing about 1.2 or thereabout on the PCR markets, completely taken a U-turn. So that pullback is very short-lived, and 5,700 call options are witnessing a lot of writing in trade. So the entire 5,500 have gotten unwound, and the focus has shifted to high level calls. On the put side, even 4,900 puts are getting active, indicating that traders probably are gearing or readying or positioning themselves for much lower levels. How are the broader markets doing today, Aban?
Well, you'd have to say that it's better in comparison to the frontliners. I mean, from 55.50 to 53.40 in one trading session alone, who would have thought? But take a look at the broader markets. You can see those levels of 67.42, and we ended at 65.45, a cut of about 1%. So you could say that they ended lower by just about 1%, not in tandem with the frontliners. But the Nifty Junior, that really mirrored the fall that you saw in the frontline index. A crack of nearly 400 points from the day's high. So you can see on your screen that a deep gash came in. The market breadth, of course, remained absolutely abysmal. And I think what really shook everyone was the fact that the volatility was spiked significantly. In fact, the VIX, India VIX, was at the highest level since November 2011. Put your name on any of the banking counters, and on the short side, they were absolutely battered. Yes Bank, Bank of India, Fed Bank, Canara Bank, all of them seeing deep gashes coming in. And on account of the way the Syrian crisis panned out and the crude oil prices spiked, you had the likes of BPCL and HPCL, which really came under pressure on the back of that. The ADHG pack was also quite beaten out of shape. So RelCap, RelCom, all of these counters really came under a fair bit of pressure. And high beta, of course, your usual suspects on a day on which the market cracks, they always get pretty clobbered. So the likes of an India Bulls Real Estate, Unitech, Punj Lloyd and IRB Infra succumbed to quite a bit of selling pressure.
All right, let's take the discussion forward. Ashwini, let me come to you first. Broadly, the way you had prognosticated about the markets, it is panning out in the same way. The pullback was quite, 300 points plus or thereabout, and we have reversed. The volume at which we have reversed in trade and the triggers all around, where do you see the Nifty going in the near term?
See, for me, an important event is the 17th, 18th, Fed policy on tapering, and chances are that we'll enter that policy fairly weak. Post that policy, there should be some sort of a rally, because that event is continuously getting priced in for the last 1.5 months. So chances are that we should retest recent lows, and I won't think that we will go substantially below them. Chances are that we'll have a sharp rally post the policy in all emerging markets, one that will probably cross 55.50, the recent top, and maybe even touch 5700. So the idea should be to play on the short side till about 51.52, and then take some out of the money calls of about 5700, which will be fairly cheap at that point.
Ambareesh, you do have the overall macroeconomic picture also, which isn't looking very encouraging. Chances of a downgrade are only getting louder. The Syrian crisis, the rupee continues to decelerate. What next for the equity markets?
I think, whatever data points are coming and whatever news items are coming, I think all are pointing towards the fact that markets will be bearish at least for a while. There is nothing really positive to look forward to, and really I don't know as to what the new governor can actually do to put us back on the growth path, to take a control on the rupee, which the government doesn't seem to be having a handle on for the last couple of months. So I really don't see, anything positive on the horizon. So because of which I've been telling all our clients that it's time to book out whenever you see a rally. What we saw in the last 2-3 days should have been utilized to book out to a large extent, get into cash, because the next 2 or 3 months is going to be quite difficult for the markets, and you'll surely get a lot of opportunities to buy at lower levels.
Ambareesh, how do you really approach the markets in the backdrop of the Syrian unrest? Because the general consensus is that any active strike from either side will lead to flare up in crude prices and weak strength in dollar, and of course hence the other side of the trade impacting Indian markets. But there's also one pocket of the strategists which believe that it would be a full-blown war, but actually a very precision strike as far as the Syrian military installments are concerned, and hence the entire negativeness could actually be priced in and would give an opportunity to buy on a sharp decline.
Whatever strike whenever we have, it's expected that it will be a surgical one. And on news of this strike, we have seen a knee-jerk reaction. It's possible that we could see a further crack, maybe of another 100-150 points. But yes, I suppose after that, once we know it's a surgical, it would be a surgical attack, and it gets over in 2 or 3 days, you'll surely see a very decent bounce back from there. But then I think they should be utilized only by traders and not really by investors, because when you look at the ground level situation of the economy in India, I don't see the economy turning around. So, from an investor's angle, I don't think it's still the right time to invest. But yes, I think opportunity is there for the traders to buy, on a crack, and possibly exit when the market rallies, because even that rally, which will start from those, lower levels, wherever it is, whether it's 5200, 5250, I don't think will really last beyond 5550, 5600.
Ashwini, what would be your call on the bank Nifty now at these levels?
Well, the bank Nifty is extremely weak, weaker than the Nifty, and chances are that sooner or later we will break the 8500 lows that we made, and maybe we'll be heading closer to 7,000. That's over a period of time. But for the moment, whenever the Nifty gets to about 5100, 5200, bank Nifty could make an even lower low. But it needs some sort of a relief rally. I think that will happen in the second half of this month, as with all other emerging markets.
Ashwini, Ambareesh, come to you on the oil marketing pack, because there was the two-leg trade which is happening today. On the one side, Cairn was outperforming the market in today's trade. Of course, crude was also looking higher. Oil marketing pack was particularly weak because the reversal in rupee, as well as risks of a flare-up in crude oil, was pressurizing that area. And then, of course, the entire opinion that there could be a big diesel price hike in the offing. In this kind of factors impacting the sector, which side would you approach?
I think I'll still stay out of the OMCs. Although I had become bullish on them once it was freed from the shackles of pricing, But then now, because of this double whammy which is there, basically the way the dollar has behaved, I mean, I would say the rupee, the way it has cracked, and the way the oil prices have moved up and still expected to stay strong. I think, if you're looking at the near future for the OMCs, it seems quite bleak. So for the time being, I'll surely not touch, any of the OMCs, because whatever price hike we are talking of, I don't think we can have a huge price hike, because as far as diesel is concerned, I think the under recovery is close to about 12 rupees, or possibly slightly more than that. But still, I don't think they'll be able to increase the prices by, at least 2 or 3 rupees. I think beyond that will be very difficult. So under recoveries are bound to continue, and OMCs will continue making losses.
Okay, stay on with us, Ashwini and Ambareesh. We'll take that quick break right here on Markets Tomorrow. Come right back with lots more market talk.
Welcome back. Still watching Markets Tomorrow. Let's take a look at one stock which was outperforming in trade today. Lupin was, witnessing a lot of buying. Every time there was some nervousness in the market. In fact, the intraday graph will indicate the strength in that particular stock despite a massive sell-off in overall markets. Ashwini, how are you assessing Lupin on the charts? And today's volume also were quite healthy in an overall very weak kind of a market.
Well, farmers will outperform for some time, and Lupin is one of the stronger stocks. But given the mood of the market, even the techs today started collapsing, because, you can only go up so much with the rupee. And now we are seeing some sort of divergence even in the tech stocks. So I wouldn't be hopeful about Lupin in the short term. And basically 750 is your stop loss for this trade. And in case the market reverses, maybe you'll get closer to 900, 910. But as I'm saying, that even these outperformers at some point are likely to give up, like we've seen with ITC, Levers and TCS.
Ambareesh, what would be your opinion on the overall IT basket, and would there be any flavor that you find within certain mid-cap names in addition to the large caps?
Not right now, because most of the stocks have already rallied quite a lot based on the rupee weakening. And the way I see it is, this is going to be only a one-time sort of a gain for most of the IT companies, because when the billing rates are revised next time, possibly they'll take into account the rupee depreciation. So I don't see a long-term gain for the IT stocks. But then I think since already they have run up quite a lot, I think the risk-reward ratio at this point may not really be favorable. So I won't advise a fresh buy at this point of time. But then looking at the situation, I think that's the best bet, where I suppose one can stay on for a while longer. There could be a bit more of an upside, but it doesn't really warrant buying right now.
Ashwini, how are you assessing JP Associates? Because surely it cracked up in the last hour of trade, down almost 5-6%. But there seemed to be a lot of trading position build-up which is happening. 40 and higher levels calls are also getting active now in anticipation of some corporate announcement. Purely from a positional play, how does that one look?
Well, I don't think JP Associates will outperform if the Nifty is going to 5100. There could be, some buzz of some corporate event, etc., that I have no knowledge of. So I don't think in a market that's, collapsing 600 points a day, you want to be, overexcited or brave to get into stocks like JP, etc. Maybe there's something, I don't know, but definitely I wouldn't like to buy into these sort of stocks right now.
Ambareesh, what's the opinion on the auto basket? A mixed set of numbers. The export factor worked for a Bajaj Auto, and you had the base effect which worked in favor of Maruti. But within this space, are you spotting any outperformers?
In fact, possibly the two-wheeler space, Hero MotoCorp could in fact perform, because again, looking at the festive season ahead, I think that's when the numbers will again start showing, better sort of numbers. So I think that's one space where one can buy from a short-term angle for a sort of a trade. But a stock like Maruti, I think I'll wait for a while longer. I would still wait for it to, correct, because again, as far as Maruti is concerned, if you're talking of the next 4-5 months, despite the festive season, I really don't see the auto numbers really improving. So I think one should wait for another possibly, at least about 7 to 8% sort of a crack from here to buy Maruti.
Ashwini, ITC and Reliance Industries today were two of the large cap stocks which are falling 5-6% today. RIL in particular, I've never seen, at least in the last 1 year, that kind of a 5.5% cut. Where do you see that kind of a stock heading now? That a big breakdown seem to be having there.
Well, I haven't seen a 4-day rally where RIL gained 130 points. So basically, it was probably some sort of short covering, and now, the stock is collapsing with the rest of the market. Maybe it's some institutional selling. RIL is extremely, you could say, in a wide range from about 760 till about 880. A good buying zone is the 760, 780 zone. Chances are we'll see that soon. So if you have to buy, maybe those are the buying zones. But I don't think right now you would really even want to get into RIL.
Ambareesh, we've said this time and again that the fundamentals remain inherently weak, and even though there may be clearances for certain stalled projects, the infrastructure basket is going to continue to reel under pressure. So is this sector a complete no-no?
As of now, yes, it's a complete no-no, because you really don't know as to when it will start reviving. Because yes, you require the infrastructure sector for India to perform. But unless, of course, you have a strong government at the center, you really don't expect the economy to improve and the infrastructure sector to start performing. So I think at least for the next foreseeable 5 to 6 months, unless the elections are over, you really can't take a call on this sector. So I think for the time being, I'll stay out.
DLF, that was down 7%. Real estate pack actually was not even participating in the pullback rally. That one, DLF, which was leading the big up move earlier. Ashwini, how does that look? Because last couple of days, even the short covering rallies, which we're seeing in some other stocks, real estate stocks seem to be completely avoiding that.
Come again?
Ashwini, what I'm asking is that the real estate pack is cracking very sharply, and there seem to be no short covering chances also happening there. In this case, do DLF or India Bull Real Estate throw up good shorting opportunities?
So is the rest of the market, so are the banking stocks, so is ITC. I don't think there's any difference right now. It's control all delete for as far as India is concerned. So wherever foreigners can sell, they will sell, and this kind of a fall has happened on institutional selling. I don't think the market can fall like this because of any kind of retail selling, etc. DLF will make new lows. I think below 120, you should look at levels about 100. Off and on, it shows like it's showing some kind of strength. But these are all minor short-term moves. Overall, from 1200, the stock is finally going to end up in double digits. That is the view on DLF.
Okay, interesting way to put it, Ashwini. We'll take a quick break and come right back. Shift focus then to some top stock recommendations. You're watching Markets Tomorrow right here on ET Now. As promised, let's get you individual stock recommendations. Poonam standing by from our research team with a list of stocks that dealers are recommending. Poonam.
Well, Avan, for tomorrow, do look at Ken India. It is up nearly 8% in the last 10 days, but it has of course been gone down nearly by quite a bit today. Again, the fears of rising oil prices because of the rising fears in the Middle East is definitely going to benefit Ken, as Ken India would benefit both from rise in the oil prices as well as a weak rupee, and hence it is a good bet again from a short-term perspective. Most of the brokerages again have remained bullish on Ken India, with the recent being Macquarie stating an outperform with her target price of nearly 378 rupees. Next stock is JP Associates, where again from a very trading short-term perspective, it's recommend a buy. The stock is up nearly 15% from the mid-August lows of 27.9. The stock is trading at multi-year lows. The company has a huge debt of nearly 24,000 crore on its balance sheet, and the company is looking to reduce its debts by selling its cement plant in Gujarat, for which Ultratech Cement is understood may be the likely buyer. This is according to the media reports, according to the buzz that is going in the markets, that Ultratech may buy into the cement plant, and the deal value may be somewhere in the region of 3,700 crores. So do keep a watch out on that, as the deal is likely to happen in the next 1 or 2 weeks.
Thanks for that, Poonam. Ken India in particular, if you look at the intraday graph, came up quite sharply from a negative to almost a 2 or 3% gain today at the time of some flashes coming on Syrian unrest. But Ashwini, looking at your negative bias towards the market, what are your top sell recommendation or short ideas for trade?
I think banks continue to remain weak. So IndusInd Bank is a sell with a stop of 363, target of 340. Axis Bank is a sell with a stop of 820, target of 770. Asian Paints is a sell with a stop of 406, target of 384.
Ambareesh, where is it that you would be placing your bets? Let's take a longer time horizon.
In fact, I'll not buy anything right now. Like I said, since I'm expecting the markets to still go down further. But in this crack, possibly one space where I think one can buy at lower levels is metals, because there I think the cycles, seems turning. And after a good rally which we have seen in the last 2 to 3 weeks in most of the metal stocks, once it cracks, because of the market, I think that will be an opportunity to buy. So surely I would look at buying Tata Steel, maybe at levels closer to about 235, 240, which is decently, I think, about 40 rupees lower than where it is right now.
Okay, a buy on Tata Steel at levels of 235, 240. Ambareesh and Ashwini, thanks very much for joining in on Markets Tomorrow. On that note, it's goodbye from Ajay and me. Thanks so much for tuning in.